Welcome to the Executive Innovation Show podcast, where we bring you real executive conversations with industry game changers and thought leaders. We ask the questions you're thinking, what you're scared to ask, and we make your brain hurt afterward. With your host, Carrie Chitsey Wells, co-founder and CEO of One Touch Video Chat, live video interviews, and the nonprofit Humans Helping Humans.
Hello, everybody, and welcome to today's podcast. We're going to be talking about digital lending growth is simple online user experience, the key to retaining and acquiring loans, brought to you by One Touch Video Banking. We've got two great guests with us today. I've got Dan Daggett, who's a 30-year credit union executive. He's the founder and president of Daggett Enterprises, a financial services agency. He's a collaborative intrapreneur whose passion for innovation has resulted in new business lines, new revenue growth, and engaging teams for over 3 decades. I've also got Foster Kelly on, who's the director of business development at Rate Reset. Prior to that, he was a top producer at Churchill Mortgage. His passion's really for digital lending and fueled part of the innovation for Rate Reset's most powerful solution. Rate Reset is a leader in digital lending with products helping credit unions and banks retain their loans with their patented technology. Guys, welcome to the show.
Morning. Glad to be here.
Good morning.
Well,
Thanks,
great.
Gary.
Well, today we're going to be really talking about, obviously it's a hot topic. Digital lending growth has been on the forefront of bank and credit union executives' minds even before the pandemic. But now since the pandemic, it's top of mind, top of priority. And, they're really trying to figure out not only how to acquire new customers, but how do you retain and increase wallet share with existing customers. So today I really want to walk through what we're seeing in the industry, key ingredients from that standpoint. So Dan, you've been, in the business for a long time, seen a lot of changes as we all kind of have, on the auto side, the mortgage side, and, as a credit union executive. What do you think has been the biggest change from the consumer side, in the last 24 months and even the last 12 months with the pandemic?
I think with the rise of so many online transactions that we're doing on a daily basis, and when I'm talking about online, I'm not just talking about, in front of the PC, it's on our phones. Everything that we've been seeing now is all digital, home banking, depositing a check, all those things that have become so commonplace. It's just been a natural outgrowth, if you will, of our day-to-day activity, whether it be, the video chatting that we're doing or, in this past year, all of the Zoom meetings that we've been on, it's just continued. And I think that expectation is carried over tremendously on the lending side. It doesn't really matter whether I'm going into my Amazon account to make a purchase. There's an opportunity to me to spread those payments out over time. And I think one of the interesting things, and perhaps not so much from the consumer standpoint, but on the banking side, is compliance and making certain that we're being consistent in our offerings to each and every consumer that we're out trying to transact with. And it's just a continual outgrowth that I don't think is going to slow down. I think the demand's going to be there, and we're just going to continue to have to meet those needs of the consumer in the place that they want to be. And that's one of the reasons, Foster's on the phone with us today, and the solutions that Rate Reset has brought there in the market.
Yeah, and that brings, Foster, a great question. You guys work with a lot of banks and credit unions, so you're kind of on the front lines to hear kind of the biggest struggles that they're facing and kind of the historical, lengthy online applications, or you can start it and then you have to come into a physical location. What are you seeing are kind of the biggest struggles of where banks and credit unions have historically been and where they're trying to go and getting from kind of A to B?
Yeah, it's definitely a culmination of a lot of things, Carrie. Being a fintech partner for a lot of banks and credit unions out there, you have to keep your finger on the pulse of what's in the marketplace to stay competitive. And, banks and credit unions feel like they have a tough time staying competitive. I asked them to imagine how competitive it must be for fintech partners like ourselves to stay up to date on everything that's going on in the marketplace. And, if you're not a year or 2 years ahead of what's already out there, then you're obsolete. You're whatever you get stood up now is just going to be outdated. And some of those obstacles that I think the credit unions and banks are facing is related to a couple of things. Legacy systems that they're on, having to try to connect to those legacy systems with some of these newer technology platforms out there. We've made our platform very turnkey to solve for that. A lot of it has to do with the fact that being able to compete against some of the neo and digital banks out there, that in of itself can be daunting if you don't know where to start. And that is definitely another issue. There's so many different options out there and different ways that you could kind of turn to solve for some of the inefficiencies that many banks and credit unions have out there, on the fact that when I go to a credit union or bank's website and I see on there that it says it's going to take 10 or 15 minutes to fill out this app.
Yeah.
I don't know how they even get new clients.
Right.
I mean, holy smokes. There are so many things out there that basically you click a couple buttons and you're done. Where they still have that mentality that, it's not broke, so let's not fix it. And I think that's kind of the wrong setup right now and a lot of people's thinking. But you do then have some of those people that are forward thinking but don't know where to turn. Yeah. Right. And I would say it's finding out those right answers to get that competitive edge in this changing environment.
What about there's still, I hear it on a weekly basis, multiple times a week, and love either of yours opinion is, a lot of your smaller community banks and credit unions, you can start an application online as a, new customer, and they're spending time and money marketing and getting people there. And to your point, it's 7, 10, 15 minutes, whatever it is. And then you get to a confirmation page and it's, hey, this account isn't open. You need to come in and show us your driver's license and this documentation and all this kind of stuff. And customers get really frustrated because, for the obvious reasons, obviously. But, to Dan's point earlier, we live in this world where we can click a button and get food delivered in 20 minutes. We can, get an Amazon package the next day. But banks live in this age where, it's so hard to do digital business. So there's a lot of executives that think that's just kind of the way everybody does it, that's just kind of table stakes. What's kind of your thoughts and advice to those folks, to your point, Foster? It's like, if you don't have that process down now, you're going to be, 2 years behind the curve or 3 years behind the curve. How do they get how do they even, how do you, I guess you can't really change their mind, but how do you get to them to a point to say, hey, that's not how others are doing it?
Mm-hmm. Yeah. When I was in the mortgage business, one of the things that I quickly learned was everyone is secretly wanting to be led. And whether or not they admit to it or ever realize it, they do. And I think I realized that in the mortgage industry a lot. And I've kind of carried that mentality over to the banking side, the B2B sales that we're heavily involved in now. And, it's just educating them on what's out there right now and how it's all connected and can be seamlessly connected depending on what platform you have available to you. And going off of your point on the fact that people have to come in and show a driver's license or actually be there in person. One of the neat things I thought about your technology on the video banking side when we were taking a look at that and its features, you're having that face-to-face connection, and then you have the place where you can snapshot the ID, right? You don't have to go in person. And that synthetic verification process is actually, in my mind, more secure than someone coming into a branch or even taking a picture of their driver's license and emailing it to the branch to set up that account, right? Because IP addresses, all of that synthetic fraud behind the scenes that we have in technology today is much more secure than some of the existing legacy systems out there. And I think just getting folks to kind of have that comfortability with that is one of the first steps, no doubt.
Yeah, and I think too, the number of clicks across any industry is always an indicator of conversion rate, right? And everybody spends a lot of time on user experience and looking at the number of clicks and how long it takes and, abandonment rate and all that kind of things. You guys are doing some interesting things with alternative data for existing customers to not have to go through this same lengthy application as a new customer. How do you see alternative data really kind of playing in? Is it just for existing customers, or is that new customers for a lot of people that don't know really kind of how the alternative data is working?
Yeah, I mean, I would say it's a little bit of both. But the fact that these credit unions and banks actually have an immense amount of data to begin with, leveraging that data internally and using it for an alternative decisioning standpoint is very powerful. But I'll also let Dan speak to this as well, because of his previous background and his previous roles, can have a lot of insight on leveraging alternative data, whether it's related to existing customers and members or it's using it to gain new ones, so to speak. But yeah, Dan, what are your thoughts too? I mean, the roles that you sat in on the different seats, so to speak.
I think a lot of the concerns when it comes down to that alternative data is validating who individuals are. And, if you've actually had the ability to see the capacity of the information that's out there on yourself and the folks that are around you, it's to some extent kind of scary. I mean, literally with a few keystrokes, I can sign into some software and I can find out who Carrie's mother was married to 30 years ago and who they were related to. I mean, the validation of data that's there is just unbelievable. And when you go through some of those customer identification programs where it comes up and says, okay, what was the color of your first car? And it gives you 4 options. You remember the color of your first car, and you put that in there, and it's validating that information. To a large extent, kind of like you just said, Foster, it's almost more secure than the customer that's coming in with a driver's license. And does that teller really know to validate whether that's a true, driver's license or not, as opposed to opening up that customer online? And in different delivery channels, having come from the indirect lending space, we see it all the time. We're holding up funding a dealer with different entities because we need to identify based on these traditional, really archaic methods of identifying those folks, when we could simply utilize some of this alternative data to better identify that individual and move the transaction along at a much faster pace.
Yeah, and just to add upon that, just real quick, Carrie, too, related to that question on the number of clicks and the efficiencies and alternative data, you also have the aspect of creating a more personalized, customized offer, right? Which means a lot more to the consumer. And it really kind of has that mentality in their mind that you actually know me. And if you're not even a customer member yet, you have that first impression that you possibly would be a good fit for me, so to speak. But, definitely the fact that getting me from point A to point B with as few clicks and frictionless aspects of digital lending is hands down how you're going to win the consumer's business all day long, so.
Yeah, people don't have don't really care that, Facebook or, TikTok or Instagram has everything about them. And, all of a sudden they get all these ads of things they've been thinking about or past purchases. But then when you go over to a bank and you're like, wait, how do you know that I like to travel this airline for this credit card or whatever? People start getting freaked out. It's like, well, you just got served a Facebook ad for, something your husband or your wife looked at. And all of a sudden you're like, wait, how's my phone connected to theirs? And I'm like, so people need to know that, they have that capability. So I want to shift, Dan, having been a former credit union executive, banks and credit unions are built on that face-to-face relationship, coming into the branch, going to, taking folks to lunch, doing all that kind of stuff. And that's just not really the world we live in. That happened, pre-pandemic and, pandemic even pushed that further. But when we talk about digitally acquiring customers, depending upon the demographic, millennials, there's been a lot of reports lately, millennials need that financial advice hand-holding. They're making a lot of firsts. We've got Gen Zs right on their backs that are now 23, 24 that are doing the same thing. And, they are a digital demographic, right? So they want to, apply online and do all that. Obviously, there's solutions now, video banking, video chat, as Oscar mentioned earlier, that you can put on. And so you're not having that abandonment rate, or if they have a question, they don't leave it and then forget about it. And so you can increase that conversion rate. But breaking that down, there's been some studies, and I want to get your thoughts on this of, the whole point of digital is, customers are demanding it, and it's less costly than someone coming in and tying up somebody for 30 minutes to manually fill out paperwork. But I think a lot of bank and credit unions don't really look at what is it if they have this bad application process and they don't have a video chat or a text chat or video banking there, and that person abandons it, what is that cost, right? And then even worse is they then have to go drive to a branch to complete that process. And so now our digital acquisition costs, you now have a human in a physical branch that you're taking away. What are kind of the downward kind of cycles of how that really relates, putting your executive hat back on of what that really costs the credit union, resources, dollars, cents kind of thing? What are your thoughts on that?
Certainly. Well, I mean, I've got perhaps a different perspective on that, being in Maine. And here in Maine, we have what we call snowbirds. And snowbirds are those folks that, come, the 26th of December after they've celebrated Christmas, they're packing up and they're heading somewhere south. And, back when I was sitting as a CEO of the credit union, a lot of those folks had 2 or 3 different banking relationships, because when they were in Florida or Arizona, they didn't have access to our institution. The first iteration of that was shared branching, which allowed us to be able to just have that member of ours go into a credit union that was on shared branching in one of those locations. It made us more viable. All of a sudden, we had 3 branches, but now all of a sudden we had 1,900. Then come the check deposit capture on the mobile. And now I think it's an outflow of the video banking. That if I want to chat with Carrie and I'm in Arizona and you're in Texas, we can still do that, and we can do it in a secure way. It's a definite opportunity cost that the credit unions or banks are letting go if they're not jumping onto those platforms. In addition to that, like you mentioned, from that loan standpoint, the acquisition cost to get somebody to apply to begin with, and then what's the cost if that goes by the wayside?
Right.
When you can simply leverage that technology to your benefit. And, it's certainly become significantly more relevant in this past year. I shouldn't say relevant. It's always had a tremendous relevancy, but it's much more obvious that need exists.
And one of the things that we get, a lot of people are focused on, how do I get more customers? How do I get more customers? Their margins have come down with rates, and, maybe they're making less. And we're doing a webinar on this in a few weeks, actually, because we get this all the time is you're spending all this money. You've got a marketing team, you're spending this money on digitally getting the customers. And then you put them in a bucket of a traditional customer, make them come into a branch, right? And so people are not looking at, okay, how do we digitally retain them, right? So if, my mom wants to go into a branch and open an account, and then if she has an issue, she wants to go into the branch, that's great. Still need to be able to service her, but I don't want to do that. I want to be digitally open an account, and I want to digitally service you. The worst thing that I hate is when, the banker calls, it's like, hey, can we stop by your office? Or, can we take you to lunch? It's like, no, I'm busy. Like, we can video chat. We can do that for 10 minutes, but I don't need to drive, 30 minutes to do this and make it an hour and a half trip. So I think a lot of folks, as we're talking, and Dan, back to the, digital services agency is, we spend a lot of time in this acquisition bucket. But then we've got to go a step further and say, okay, how are you going to digitally retain and service this customer? Because if we spend all this money on the acquisition side and then they just start churning because the Neo, the direct banks or whatever, I could do both, right? As we think of this banking demographic that's coming through, and millennials are 70% of the demographic now, Gen Z's coming in, and contrary to whatever believes, baby boomers aren't coming into the branch as much as people think because they're kind of more set in their financial advice. What's the advice, and how should people start thinking about not just the acquisition side, but how do I retain and service digitally as well?
I'm going to kind of jump off Foster's comment earlier. They've got to look at it now.
Yeah.
If they're not looking at these technologies now, they're getting left way behind. When I started in this industry in 1993, there were about 145 credit unions in the state of Maine, and I think we're under 50 at this point with the consolidation. And I think that consolidation is just going to increase on a more rapid basis because these smaller institutions, and when I say smaller, I'm talking, $500 million and under, they need to get on the bandwagon now. And the cost of entry is not as burdensome as some of them might think.
Right.
When you think about that opportunity cost and the way they prioritize things, they need to start looking at these things now. And just watching the technology over this past year, sitting in this office, during the pandemic, got to participate in a lot of different demonstrations of different technologies that are out there. And, there's some significant players in the market that if you're not on board with them, your competition is, and your member's going to go there.
Right.
Your customer is going to go there. It's just, it's not if, it's when.
Yeah, exactly. Foster, any last minute thoughts on that?
How do you put it nicely to the folks? Like Dan said, it's not if, it's when. There'll be some cases where I have 5 or 8 meetings with the same group of individuals at a bank or credit union. And it's at that point, it's like, what else can I say to these folks to let them wake up and see what's going on, and to take action on just all the different great services out there, and then that's a hard conversation in and of itself. But the other thing is, again, going back to data and being able to leverage it internally from a retention standpoint, we found that leveraging that internal data is absolutely critical to that retention side, because the more you show to me that who I am, the more I'm going to feel value of being a continued customer of that bank or credit union. So that would be my last remark.
Yeah, and I think that personalization is why people go to these smaller banks and credit unions. And with the technology so inexpensive in comparison, they have a bigger opportunity to fastly implement, because the mega banks don't really know who you are. You get a different banker, every time, or, there's never a long-term relationship, and, their targeted marketing is more mass marketing, right? So I think the time is now, and that they actually have an opportunity with some of these technologies and how cost effective are to actually surpass the mega banks that would take them 18 months to implement something, such a large scale. So as we look into the rest of 2021 and we think about digital lending growth for banks and credit unions, what's 1 or 2 things advice-wise that you would give executives if they were sitting in front of you on what they've got to have on their radar for this year or part of their digital strategy? Dan, we'll start with you.
I'm going to stick with what I know the best, and that's the indirect lending side. And so many times we see institutions that will spend upwards of $1,000 to $1,500 to acquire a car loan. They put that loan on the books, and they may service it in terms of collecting payments, but they don't do a good job in really onboarding that consumer. They know everything about them for all intents and purposes from that process of getting the car loan, and they don't take that next step to sell that next product or to bring that in, or even retain that loan on the books when competition's coming in on a regular basis to get them to refinance somewhere else.
Or get the next car loan.
Or get the next car loan, exactly. And the technology exists that's out there right now to help onboard those folks in a consistent, compliant manner, to engage them with more products, make that a stickier relationship. And I think that's one avenue that folks should really look at now.
Great. And Foster?
Yeah, I mean, it would be two things on my side. First and foremost, have a strategy. I can't tell you how many times I talk to these banks and credit unions and some of these executives and the team members on, these digital initiatives. I mean, you see like the chief DO, the chief digital officer, chief experience officer. They're making all these new roles and they're bringing people onto these teams, but they got this web behind them, sometimes on a whiteboard, that they have no idea which way to turn. So just have a strategy, have a plan in place, have a foundation created, because oftentimes they look at technology like what Dan and I offer and what you offer, and you may do an awesome job selling them on it. They sign the contract, and then hell, they're not even ready to implement the damn thing. They don't have all their ducks in a row, and they're just kind of pinballing all over the place. So just be strategic in what you do and stick to that plan, and then get off, stop sitting on your hands, do something. You know what I mean? Like, then take action. That's the biggest takeaway for me. Yeah.
And it's funny you say that. We've got a show the next week coming up about the culture change. And I think that has a lot to do with what you're saying is, whether it's an innovation officer, a digital officer, whatever, if they can't change the culture mindset of, we've banked this way for the last 50 years, and you have that executive that's used to old school banking, common, we do paper, we do face-to-face, whatever. It doesn't matter how many innovation or digital officers you hire, if you don't have a top-down culture, buy-in, and you're willing to change processes and really listen to your customers or members, it doesn't matter how much money you throw at technology or how little money you throw at technology, it's not going to be successful. And I think that's one of the biggest things we see is, well, we've always done it this way, or we've, this is, our executive, our CEO has been here. You hired this, influencer VP level management, but they can't sell it through to the CEO that's been the CEO for, 30 years in that local community. So I think, we're going to talk about this more on next week's show, but I think too, people really have to think of the culture shift. I mean, this is the first time ever that bank employees have worked from home, right? Mm-hmm. And so, it used to be nobody could security and you can't access people's financial stuff. And then all of a sudden banks are caught with their pants down during the pandemic and there's no choice, right? So I think there's been a lot of strides of that will never happen that's come this year. I think the biggest thing in 2021 is we know it's not going to go back to how it was pre-pandemic. People that didn't know how to mobile bank had to learn how to mobile bank, right? The people that were doing basic transactions and walking into a physical branch aren't walking into a physical branch anymore. And so as we look to your point, Dan, of, there's consolidation, there's a lot of, merger acquisition, people are building smaller footprints on the branch. It's really about, thinking about how do you optimize that workforce the best, as well as how do you, retain and acquire customers differently than you have previously. So I want to thank you guys both for being on the show. It's been really great. To learn more about what Dan and Foster are up to, click in the show notes to learn more about Daggett and Rate Reset. As always, make sure you subscribe to the show. Get your Tuesday, Thursday shows delivered to your podcast player of choice. Guys, thanks so much for being on the show. It's such great insights, and I'm sure we'll be talking about this again maybe later in the year of what war wounds we've had this year of trying to move the needle with these guys.
Sounds good.
Definitely. Thank you, Carrie.
Thanks so much. This concludes today's show. We look forward to seeing you next week.
This podcast has come to a close. To hear more from the Executive Innovation Show podcast, subscribe, submit questions, and share the love. Follow us on social. We're everywhere.